Welcome everyone, you're listening to Nephology, the podcast dedicated to crypto, accounting, business, finance and much, much more. I'm Joe David, the founder of Nephos Group in Minor. Please note that all conversations recorded are professional opinions, and if you'd like to know more or gain support, please reach out to the team directly. Now on to the next episode. Welcome everyone to the latest episode of the Nephology podcast. I'm delighted today to be joined by Julien from Psalion. Julien, how are you?
Very good, thank you. Thanks for having me.
Thank you for coming all the way from Paris.
Correct, Paris.
Paris this morning and then flying out again this afternoon or this evening. So Tomorrow morning, okay. So we're pleasure to have you here and I'm really excited actually for this discussion because we, as a business, we talk to crypto people, companies, whatever you want to say, all the time, and everyone is looking for a bit of yield or a bit of something extra on their money, and they want to earn something. And typically, the products that are out there with centralized exchanges and things like that aren't necessarily as secure and whatnot as we might like. So really excited to talk this through. So. As we've said before, you're Julien, so maybe you can give us a little bit of background on who you are, how you got into crypto, and how you ended up at Psalion.
Sounds good. So my name is Julien Jost. I'm one of the three co-founders of Psalion. So we're a digital asset management company based in Paris, France, and San Diego, California. 12 of us. I got into Psalion when I was introduced to our managing partner, Tim Enneking. I was doing a little bit of OTC trading on Bitcoin, and he said, forget the OTC trading on Bitcoin. We're going to do a VC fund, and we're going to have a DeFi product. I'm going to introduce you to our third founding partner, who is Lohan Venkatapan, our CIO. So he's very deep into the DeFi space. Started off by mining Bitcoin when you used to live in Singapore, and then came back to France to start the first digital asset management company to be regulated by the French authorities, market authorities. So that's quite a challenge if you know a little bit about the French.
I mean, we know how it is in the UK. I'm sure it's similar in France. So
yeah, and our third co-founding partner, Tim, goes way back in the space. I believe he's been working. He ran the first crypto fund back in 2013,
wow.
And then went on to create the first trading fund and crypto funds of funds. One of the first guys to apply traditional finance principles to the crypto space. And we brought our teams together, and now there's 12 of us, half in Europe, half in the US.
Amazing. And what's the business itself then? What's the premise? What are you trying to achieve?
So at Psalion, we have, three main verticals. So the first is our venture capital fund. So that started in August last year. At the date of the recording, there's 11 investments to date. Very, very interesting times because we're deploying at a perfect time for if you're lucky enough to have dry powder in the bear market.
Yeah, for sure. Yeah,
it's great. Our second vertical is a pure DeFi product, so the yield one that you mentioned in the introduction. So we're just providing liquidity to decentralized applications, market makers, exchanges, and generating yield without taking any market exposure other than the native assets that the investor chooses for his account. And the third vertical is more bespoke services for high net worth clients or small institutions, and we do a bit of transfers and anything that people need help with to access the crypto space.
Yeah, that's really interesting. So maybe if we kind of go through them in a bit more detail one by one. So the first one, the kind of venture fund, as you said, I'm sure we don't need to be specific in names, but what sort of industries, obviously crypto, but what sort of kind of verticals or whatever you want to call it within crypto are these sorts of companies that you're investing in and what you're looking for?
So we're completely agnostic in terms of sub-niches within the crypto ecosystem. We do have a strong deal flow in the decentralized finance due to the nature of our other product and how involved in the space in the decentralized finance niche our CIO is. Pre-seed, seed, no
specifics.
Geography agnostic.
Okay.
To date, we've invested in at different levels, so we can be at the infrastructure level, invest in projects which are by the blockchain, for the blockchain, to make the blockchain work better. And finally, more retail-facing applications, products that facilitate crypto adoption, both for institutions and for retailers.
And that fund is do you sell that fund in terms of an investable product for investors to invest into that fund that you're creating, or is that solely a Psalion investment fund for Psalion returns, if that makes sense?
It's just a Psalion venture capital fund.
Yeah.
And it has
so it's not something that clients can say, I want to be part of that fund.
Well, the clients can invest, or they can suggest projects. We look at everything.
Yeah. Okay.
And there's a lot of synergies between our three different verticals.
Yeah, for sure. So then moving on to the DeFi product. So maybe talk a little bit about, there's an element of assumption that people listen to this sort of podcast will have a basic understanding of crypto, DeFi, how LPs work and things like that. But maybe just start a little bit. We don't have to go right to the beginning, but maybe just start a little bit around how important liquidity pools are to a decentralized exchange, and then what you're doing with that, if that makes sense, how you benefit from that, and therefore how your customers benefit from that.
Okay, so decentralized finance allows for peer-to-peer trading, basically, without a centralized party. So in order for these exchanges to allow Julien to buy and Joe to sell his asset, they need liquidity. So what happens is that for each account is diversified to 3 to 5 different protocols or liquidity pools. We allocate to these liquidity pools, and the exchange uses that liquidity to allow Joe and Julien to transact between each other, and charges us a fee to Joe and Julien. And a part of that fee is retroceded, given back to the liquidity providers by the exchange. Mm-hmm. And that's what we receive, and that we recompound onto the investor's account.
So, great, really well explained, thank you. So, as an investor, I invest in the DeFi product. Let's just call it £10,000 for argument's sake, just for ease of conversation. And you then take that £10,000, deploy it on a decentralized exchange, receive fees, and then I receive a proportion of, so if I've got 10% of the liquidity that you guys have provided, I'll get 10% of the fees, easy numbers here, that are being sent back to you guys for providing the liquidity. Is that a fair?
The exchange pays back to Psalion, and everything that we receive we put back on the investor's account. Yeah,
okay. Yeah. And when we talked a minute ago around, before as well, we talked about market neutral and mitigating risk and things like that. And you mentioned in your intro around the different products, the only market risk that clients are taking is to the native asset that they're investing. So to break that down again, so if I only want to invest stablecoins, so I only want to invest USDC or USDT, how can you manage that risk? And as an investor, what risk do I need to understand that there will always be, if that makes sense?
Correct. So it's a market neutral strategy, asset neutral to be precise. Some investors, they're long BTC or long ETH. They know they're just sitting on a pile of it. Mm-hmm. They know it's gonna come back to all-time highs within 18 months. They don't want it to sit idle, so they put it with us. So if they open a BTC account, we'll generate more BTC on their BTC without taking any other exposure to any other asset. Same with ETH. And for those who don't sleep at night because of crypto volatility and don't want any of that and just want to earn the yield, they want to open an account in dollar-pegged assets, so USDC or USDT, and we would just generate more of that without taking any exposure to any crypto asset.
So if I put USDT or USDC, I have no exposure to anything let's call it more volatile, such as BTC, ETH, etc. It's solely the assets that I'm providing.
Yes.
And where does, there's always risk in life, where does the risk come? What should people be, in a positive way that we need to take this, but where should people be considering the risk that they're taking by depositing funds with you guys?
Well, there's always a structural risk. Well, we think it's minimal, but the 80% of the risk in this product is protocol risk. It's the only counterparty we have is the protocols to which we allocate liquidity. So each protocol undergoes a very strict due diligence process. We have a screening matrix. We screen 4,000 to 6,000 pools on a daily basis for both security, safety, and performance metrics. We work with a cybersecurity company that reviews the smart contract code for us between the moment it was audited and the moment we deploy, and then after on a continuous basis after we deploy. We work with another service provider which continuously monitors the pools to see if there's no malicious wallets interacting with the pools. We also only allocate to audited protocols. We look at who audited the protocol. We don't allocate to anonymous teams, so we often know who's behind the protocols that we allocate to. There's many tools and processes that we have which allow us to de-risk what is considered a low-risk product, but in a risky environment. So if you put all these risk mitigation layers, tools, processes, specialized partners, one after the other, at the end of the day, your risk is close to zero.
Yeah. And I think that's the key is it's never going to be zero in anything you do. It's not zero if you put your money in the bank. It's not zero, to be honest, if you keep your money under your mattress because somebody could break into your house and find it and take it, right? So risk is never going to be zero. And this product won't be for everybody, as we've talked about, but there are a lot of people out there that are quite happy to take market exposure in assets. So BTC, because they're going to sit on it anyway, for example, so why not earn a bit of yield? The next kind of question that then comes to mind around that is custody, and where the custody of the assets is, and how a client can be sure that, because it's such a big thing in crypto, as you know, can be sure that the custody is on point with you guys.
Absolutely. So we only work with tier 1 custodians. This strategy is 100% custodial. So we're working with Credo, which is one of the top custodians that gives us access to a lot of different decentralized finance applications, and we can custom tailor and then configure each of the custodial accounts to have the necessary validations and issuers, and ensure that the assets are always safe. And we never hold the assets ourselves, so when there's a crypto investor, he would transfer directly from his wallet to a custodial account. Never transits through a...
So when the fund, while somebody may say, I don't want to send my funds to you because I don't trust you, that isn't what they're doing. They're sending it to their own, in a sense, wallet with a custodian that you guys have access to effectively.
Correct. We can set up the account in several different ways. Some people don't want to bother opening an account with a custodian, paying their monthly fees and doing their KYC and so on and so forth. And so they rely on us to open an account for them under our main account. And sometimes for regulatory reasons, for trust reasons, for compliance reasons, we have to work on the client's custodial account. So in this setup, we're more of an outsourced trader rather than receiving the assets on our account and farming there.
And the client has always got the ability to change that access if they want to be able to take those funds away if they want to. How does that part work? If I've got money with you and I say I want my money back and you say no, where's my recourse there?
Yeah, so if we're farming on your custodial account, you can just stop our access at any time. You're the administrator, you're the owner. We're just We're just given the opportunity to generate yield on your account for you.
Yeah, but if we use your custodial side of it, there is an element of trust in that case, where
Absolutely.
that you guys are going to act accordingly, etc., etc.
But we can also set the account up so even if it's our custodial account, the investor using the custodian's web-based application or smartphone app can see all the transactions that we're doing, or may need to validate each transaction that we're doing. It's quite cumbersome because it's a very dynamic strategy.
Yeah.
But some clients request that.
And I guess you could say, for example, whilst it's being traded in a DeFi protocols, it's kind of able to do what it's going to do. But if you tried to withdraw that from that wallet to a totally separate wallet, you could then put different measures in place for situations like that.
You can custom tailor all the security parameters and safety and who is allowed to do what and in what way.
Yeah, for sure.
It's easily you can monitor it quite easily.
And the obvious thing there, as you say, is that being as it's crypto, being as it's DeFi, it's all wallet address, and therefore it's all trackable on block explorers and whatnot. So even if you, as an individual, don't have access to Credo, don't have the ability to see everything via that, you can always use the wallet address, plug that into a multitude of platforms and see what's going on.
Each investor is given his wallet address on the blockchain. So one of the main USPs of this product is full transparency. We provide a dashboard so each investor can connect and see his daily balance. There's the wallet address, so everything is visible on chain. You can see your assets. And then there's a monthly statement and all kinds of different reporting. Not like on centralized exchanges where you send your money and it just disappears in the matrix, and
indeed,
and you don't really know where your assets are sitting. In this product, you retain ownership of your own assets, and you can see where they are at any point in time.
And I guess and this might be the wrong legal phrase, so forgive me if it isn't, but it's kind of like delegating them to you guys in a way to transact in this DeFi investment mechanism, rather than giving them to you to do it, if that makes sense.
That's correct.
Which is a very different...
In our standard setup, the investor retains ownership, but gives away possession and control. So that's the 3 layers, and the possession, it depends on the type of setup, but the ownership, the tokens are always
remains the investors. Yeah,
correct. So there's no lending.
Yes, correct. Yeah. Which is also
lending product.
Yeah, which is also useful from a tax perspective in the UK, and how some of our crazy rules apply to situations. So, So in terms of so we've gone through what the product is, how you're generating the yield, the security, custody, etc. of the asset. So obviously we'll caveat all of this with, investment returns are variable and all that sort of stuff, and we're speaking as of today, not as of 6 months time or what have you. But what sort of returns are you getting on these products, and how's that changed over the last maybe 6 to 12 months?
Yeah, so in 2021 we were achieving very, very high returns, but it was unusual market conditions.
Yep.
They were so high that it was even very difficult to sell this product. So either you're taking inconsiderate risks, either there's a scam. So now we're back to levels which are...
It was so good people didn't trust you.
That's correct.
Yeah. It's crazy.
We still managed to... all these guys that joined us in 2021 are still with us today.
Amazing.
It's great. The performance was around 20% net APY over the first half of 2022. In the past 12 months, we were around 10.5, 11% on all 3 asset classes. So that's Bitcoin, ETH, and stablecoins.
So the yield that you generate doesn't vary much depending on the asset classes being invested. Yeah. And
what we've seen in the past month is that it's starting to be a little bit different. So like Bitcoin's gotten down to about 9%. ETH has gone up to almost 13%.
Wow.
And stables is still in the 10.5, 11% APY. But the 11 months preceding last month, they were all in the same 0.5.
Yeah, interesting.
Percent.
Yeah, and for those people that sit here and say, okay, all very well, good, I've listened to what you're saying, all sounds great, but I don't believe even 10% is an achievable target for stablecoins. You must get that sort of question a lot. How do you answer that question? What's the response to that sort of question?
Yeah, so the way the yield is generated is there's two different sources of yield. That's what we have to understand first. The first half of the yield is trading fees, sharing of the trading fees that the platform is able to get from trading, so on volatility. And the other half of the fees of the yield is generated by liquidity mining rewards, which are incentives that are given for you to provide liquidity to a specific protocol. Where we generate alpha is basically when we allocate to different blockchains. We use forks of the main historical protocols, and we access different blockchains on which these forks are running. And our screening tools and our CIO's deep network in the space allows us to catch very good yield opportunities. Sometimes lasting 1 or 2 days.
Yeah, okay.
It looks like it's very static when you look at the dashboard, but we're reallocating very frequently.
Yeah, so what you're effectively doing, and again, I'm dumbing it down, so forgive me, but you're scanning the market effectively for the best possible rates you can get, and those rates might only be available for a day, 2 days max, but you are aware of them, where I might be aware of them as a retail individual, I might be aware of them a week or two after they've ended, and you see on the news or whatever on Twitter that these rates were there and they're not anymore. You not get access, that's the wrong phrase, but you're able to see those rates earlier and therefore maximize those opportunities, then come out of those and go on to the next one.
Absolutely. We're allocating to pools and protocols which are not already popular.
Yeah.
And when the pools become crowded, the yield, the fees that are paid by this pool go down, and that's when we reallocate to another pool, rebalance the portfolio.
Yeah, makes sense.
It's a very opportunistic approach.
Yeah, so it's one of those. It's not a passive investment portfolio. It's for the individual, for the investor, it is. But for you guys as a business, it's very, like you say, you've got to be always on it and always looking at the opportunities and always ready to kind of deploy or pull when you need to.
Absolutely, yeah.
Yeah.
It's very dynamic, and it's very opportunity driven. So we see an opportunity, we allocate to it, and then we rebalance.
Yeah, no, I like it. So that's the two products. So the third product then to touch on is the kind of high net worth, I guess family office, that sort of stuff, where and I'll let you explain, but where you guys are helping them facilitate crypto transactions. So what do you mean by that? If we've got high net worth or family office administrators, etc., listen to this, how can you help them?
The most demand we have is for on-ramping and off-ramping crypto. People or companies that don't necessarily want to go through a centralized exchange. They trust us because they've invested in either of our two strategies or both, or know us from a long time. And we can do fiat to crypto, crypto to fiat, or crypto to crypto transactions for them. We can also work with more exotic currencies through our network to optimize payment solutions between countries where there's lots of inefficiencies in the banking system. So there's a massive use case for cryptocurrency to facilitate foreign exchange transactions, for example.
Yeah, we spoke about Africa, for example, haven't we? There's a large opportunity in South America is another, especially these high inflation where their own currency is risk of such, or is currently going through a really high inflationary moment, there's a real opportunity for crypto to support that. And we'll, if for example, high net worth clients, whatever, let's say they've got into a project early, they've received a load of their tokens, will you kind of help them facilitate OTC to get rid of those, or things like that?
Yeah, absolutely.
It's kind of I guess in a sense, for those sorts of level of clients, it's a kind of white glove, whatever you guys need, we'll look to try and facilitate that in some way.
Yeah, exactly.
Yeah, great. And what does the future hold for Psalion? Like, where do you see the business going? What's the plans? Do you have any plans for anything, different, or are you kind of like this business model works and this is where we're working? What's the future?
So on the VC front, we should be finishing investing Q2 or Q3 next year. Mm-hmm. So as soon as we finish investing, we'll launch the investment and capital. We'll start raising for our third fund.
Yep.
For the high yield accounts, we're continuing our journey. We started off with very crypto native crowd that wanted to diversify after the bull run.
Yeah.
Then we moved on to small crypto institutions. We're now very much used as a treasury management tool, mm-hmm. Due to the 6-hour liquidity on the product. The fact that there's no lockup, that you can just come in, come out when you want. And onto more traditional finance players who want to dip their toes in the crypto space. So we're there to accompany them. There's many ways you can enter the crypto space. You can just buy Bitcoin. You can go to venture capital. You can stay away from crypto volatility and just have USDC or USDT that you generate yield on. There's many different ways. So we're there to accompany them in the beginning of their crypto journey. And let's see where that takes us.
Yeah, no, it's really interesting. And as we said at the start, we're working with you to support our clients, to help them generate yield in a more trusty, however you want to call it, manner. In a sense of, they quite often say to us, I've got this crypto sat here doing nothing, but I don't want to use Binance to generate yield, or I don't want to, put it in a liquidity pool myself because I don't fully understand, I'm not on it enough to be able to track it. And that's the key thing, I think, with you guys is, I could invest in liquidity pools, and I have done in the past. And quite often I've ended up with impermanent loss and all those different bits and pieces. And you think it's a great idea because you're running this yield, and then you go to put it out of the pool and you realise that you've lost half of it on impermanent loss, and there was no point in putting it in the first place. So I think it's not so much can people do it. I'm sure they can. It's more about having you guys that are constantly reviewing the market, constantly available to look at it and to make sure the right investment decisions are being made.
Yeah, correct. It's a very time-consuming. There's a story I like to tell of one of our investors. I hope he'll be listening to this podcast. I'll send it to him.
Yeah, for sure.
He basically was spending 70% of his time rebalancing. He was doing as good a job as us, to be honest. And then he just decided to give us his crypto, and his wife came to thank us
because she got her husband back. And that's a really nice story, right? It's a really good use case, or a really good kind of selling point, if you like, of this guy sounds like a sophisticated investor, somebody that really knows what they're doing. So giving it to you doesn't mean he doesn't know what he's doing, but it just means that he gets to spend time on those things that are important to him, like family and things like that. So that's a really nice way to put it. So cool. So that's a nice end, I guess, to the conversation. So for those that want to reach out to you guys directly, obviously they can come through us, and we'll link that in the description. But if they want to come to you or talk to you guys or see you guys directly, where can they find you?
You can go to our website, psalion.com, Psalion.
Yeah.
And by the way, that means chain in ancient Greek.
Oh, I didn't know that, actually.
Yeah.
Oh, okay.
Yeah, so that's our website, or contact at psalion.com, Psalion.
Amazing. We'll link that in the description as well, so that people are able to find you guys. And again, like I say, thank you so much for coming. Really good to have you, and look
back in London.
Look forward to the long and fruitful relationship that we've got coming up.
Likewise.
Cool. Thanks, Julien.
Take care. Thanks.